Hello, everybody, and welcome to an impromptu Sunday edition of Trade the Chain, Market Rebellion. Don't know what to call it. We decided to hop on and have a little fun with you guys today. CJ here has joined me, and we're gonna do something interesting. So we were thinking, we were like, hey, wouldn't it be cool if people saw like our regular portfolios, like, maybe something we put together with equities and stuff like that. I mean, last week we did our crypto portfolio reveal, and that was interesting. I enjoyed that. A lot of people watching enjoyed that. So what I decided to do was get CJ on because two interesting things. One is we each have a regular trading account that is about the same age. We started about a year ago, like right after the bottom fell out of the markets, sitting here after COVID, after we went into lockdown and everything else. So we each have a portfolio that is similar vintage, but each portfolio has a different story to it. And kind of wanted to go through each one with you guys, show you what we own in each of those portfolios, and kind of explain what our train of thought was, let's say a year ago to going through the 12 months, because it is interesting and times have changed. And 12 months ago, our mentalities across the world were a lot different than they are today. So without further ado, and waking CJ up on a Sunday, CJ, you're up first, my man. Tell us the story of your portfolio, what you have in it, how much you've made, percentage-wise, and what the story is behind it.
Thank you, Alex, for the Sunday episode. Always appreciated. And I hope everyone's having a wonderful weekend. Beautiful weather here in Chicago, finally getting up above 60, some people playing golf below my apartment, so it's very nice. But like Alex was saying, with portfolios, I think all of them require kind of a story behind them, because not one portfolio is going to be the same. Not one portfolio is going to be designed for two similar people. They're all going to be different because in reality, we are all in different stages of our lives. Individuals closer to retirement age are going to have a different portfolio than somebody like myself coming out of college and looking to take a lot of risk. But essentially, the story behind my portfolio is that anything about Monty and I, we dormed together. We're not like in the same room, but relative suite distance. And we mined quite a bit of Bitcoin, and so we had a little bit of coin going through the bear market. And so coming out of college, I had a little bit of capital to allocate. I kept about 50% of it still in the crypto market, but I wanted to put the other half into equities. And so one of my friends, I guess more of a mentor to me, he actually started his own firm when he was like 28. I think he's around like 33 or 34 now. But he and I sat down at that particular point after the market had crashed in 2020 in March. It was around March or April where I was talking to him like, I think it's time to deploy some capital. The market's really come down quite a bit here. And he's like, all right, let's come up with a plan. You're younger, you can take a lot of risk. You don't have dependents, you don't have attachments like a wife and kids. We can really push the ball forward on this one and try to grow wealth very rapidly. And so that type of mentality led me to take a lot of risk in the cryptocurrency market as well. But for the equity markets, this is what he put together. It is an actively managed portfolio. And before I go into the details of the allocations, one thing I will say is that none of his clients lost money in March during the crash. This is one of the parts that was really attractive to me about this individual's active management strategy. And if any of you guys want to know the name of the firm, it's called BCH Wealth Management. It's kind of a smaller family office in northern Chicago. But initially, the reason why none of those investors lost money in the COVID crash was because he and some of his partners had taken, I think there was a roughly 25% allocation in the S&P. And then there was an even larger, I think it was 25 to 30% allocation in the VIX in a very short period of time. And so when the market crashed, the VIX went up about 30% in a day. That volatility continued to spike as the market crashed. And so the VIX actually was a really nice hedging tool and a very successful hedging strategy for market crashes such as that. So that was one thing that was really interesting and something that I found very impressive. But after the entire year, I think it came out to about 33% throughout the first year I had invested. And then the second year, from January 1st of 2020 up until today, or Friday rather, that was, I believe, about a 14%. So this actively managed fund has done about 40 to 45% within the last couple of years, or ever since March of 2020 or April of 2020, that same like crash level. But as you can see here, it's pretty spread out, pretty balanced portfolio, starting here with the Alternative Harvest ETF. That one has been up quite a bit this year. And just give me a second, I'm going to pull up some previous performance on some of these. We also have the iShares Russell 2000 ETF. Very similar to things such as the S&P 500, but another way to get some solid performance. That one's been up 12%. Facebook, great technology company, very, important for business. And despite whether or not we criticize Facebook, it's still a very essential part of most businesses' practice. Ford, very, very interesting year. I think it's been up, let's see. It has been up. Apologies, guys.
No, it's been up a decent amount.
This is part of the Sunday episode.
Yeah, so folks, just remember on CJ's portfolio here, these percentage points are portfolio diversification, not performance. I know this because I own some of the same stuff, and it's more performance. I know the performance of it. So
Tencent has been one of the top performers. I think it's been up approximately 60% over a 1-year period. Some of the others that I want to highlight in here.
Explain Tencent. I saw that on your portfolio, and I was like, "What is Tencent?"
I honestly don't know. Like I said, this is not something I want to also make clear that I neglected to mention before is that my expertise is not macro portfolio allocation and management. My expertise is trading altcoins and Bitcoin and options. And when I profit from those trades or when I can make money, when I did mining, I take that and you look at alternative investments such as how to build a macro portfolio that can still take risk and keep you in the market, but is ultimately going to protect you long-term as well from those crash type scenarios. Tencent, I have to say though, I'm not super familiar with it, but it has performed incredibly well. A lot of the others, Goldman Sachs has been up over 30% since its allocation pool. The financial sector has been rallying quite a bit. It's been a nice place. Another thing I want to ask you, Alex, do you have anything that overlaps in your portfolio here before we get to your full Robinhood allocations?
I do. So I have some direct overlap with one of your holdings, but I do have overlap in general with your sectors.
Yeah. Most of these are like ETF or sector plays in the most part. Like you see there with the Alternative Harvest ETF, the Russell 2000, emerging markets, internet and e-commerce. So, yeah.
Now, here's a question for you, CJ. You mentioned it's actively managed by an outside wealth management firm. Do you do any self-directed investments into this portfolio? In other words, like let's take Facebook, for instance, where you're like, hey, I'd like to have Facebook in my portfolio, or did you go strictly 100% on the build from the firm?
100% from the build from the firm. I wanted this to be a place that was not influenced by my bias. Like I wanted something more authentic than anything that I could come up with. Because I do also have other holdings, mostly in crypto. But when I started this portfolio, my allocations in crypto and in the equity market were about 50-50. Ever since then, my crypto has grown to over 10x what my equity portfolio was. So there's going to have to be a lot of rebalancing there at the end of the crypto bull market, or as we get closer on. But I'm sure many of you have experienced something pretty similar as well.
What's interesting about your portfolio is I see you have Grayscale Bitcoin Trust there. So you have Bitcoin exposure. And one of the things people are going to see in my portfolio as well is a crypto percentage of the holdings, which is 100% Bitcoin, right? So it just goes to the mentality that with a traditional portfolio, Bitcoin does have a place in it. Like that's why I put it in my traditional portfolio. I think that's why you have Bitcoin exposure in yours, because it does have a place. So, when you're bifurcating crypto port trading and equity portfolios, I think the one overlap that goes in both is that Bitcoin.
Yeah. Yeah. And to your points, this particular individual is, he's been like very open and tolerant to Bitcoin. He's been wanting to get in it or have positions in it since 2017 and 2018, but it hasn't been feasible because you haven't had things like an ETF. Obviously you have GBTC, but he's been telling all of his clients to personally go out to like a Coinbase account or to a Voyager account and to put 10% of their assets individually into Bitcoin. And so you can see that innovation theme here as well with the ARKG ETF. Revolution. I really love what ARK has done. I love Kathy Wood. I think you've probably seen the Tesla increase in what was it? Their projected target for Tesla was increased this morning as well to, I think, over $3,000. So.
But also, CJ, for folks who don't know, tell them why you could just correlated ARK with GBTC.
ARK likes Bitcoin. They're very favorable to Bitcoin, but they're also very favorable to that thematic investment, investing in the theme of innovation. So Bitcoin, Tesla, help me out with some other of those companies. Those
they had Square. I mean, so basically what ARK has done, because of their, they're very on the edge when it's building a portfolio. And I think I agree with you in the fact that I think Kathy is a remarkable woman in the fact that she runs this ship, is that even though they have exposure, they have these holdings in these certain companies, the underlying exposure in a lot of them is that Bitcoin treasury holdings that these companies have. So it's an interesting play.
Yeah, no, Ryan would be happy MicroStrategy is omitted from this one. I shouldn't, but anyways. Any other questions though?
I don't. I like it. I like it that it's built up with a lot of sector plays. That always offsets or mitigates your risk on individual in particulars. So I think it's cool. I don't have, literally, I don't have a disagreement with anything in your portfolio at all. I think it's a pretty well balanced portfolio. It doesn't seem to be overweight in any particularly scary part of it. The only thing I don't know is that Tencent, but maybe that's some North Chicago rappers management company or something. But other than that, it looks good.
Yeah, I mean, I guess if I like sat down with him today and asked him, I'd probably be like, "What's up with AT&T? I don't get the AT&T play." Other than that, everything else kind of makes sense. But
I like AT&T. And you know why I like the telecoms or these mobile telecoms in particular is because over the last couple of years they've been going right up against cable companies for that TV, for the TV subscription model, right? So you have like AT&T, you have Verizon, they all have these great mobile company bases, even T-Mobile and all this stuff. But listen, when I actually cut the cord from my cable company to going back 2 years ago, and that was because I walked into my AT&T store to upgrade my iPhone, and lo and behold, they had a television subscription service coming out of Roku Play, right? So I was like, wow, this is so much more cost effective. It has 90% of the channels that I regularly watch. I'm gonna try it. I think I plucked down $20 a month at the time for being an AT&T mobile customer, as opposed to my $150, cable vision bill, and I haven't gone back. So I like AT&T and those other mobile telecoms because of their battle against the cable company, and nobody likes cable company. You tell me one person that the minute they have to get on the phone to customer support with their cable company that they're happy. No.
All right. Well, I mean, AT&T internet honestly is not much better, but let's see your portfolio. Because you've put together something very nice for us, haven't you?
I spent a little time on my artistic skills, and yeah, I will say I don't have AT&T internet, so I can agree with you on that one. All right, so here we go. So here is my portfolio. It's here's a story behind it. So last year about this time, I flew back on right on the day they did travel restrictions for COVID from the US and Great Britain. I flew back from London and got home. We went to shutdown. And for like the first couple of days, we're all locked in the house, my family and I. We're like, yeah, okay, all right. But then you start walking around, the kitchen, or you start walking around the hallways, and you're like, what are we going to do? How long is this going to last? And nobody knew. So we were at the kitchen table one afternoon. We were on the phone with a couple of friends of ours who are in the financial. One is a fund manager. The other one is a COO of a fund. And we were talking about like Robinhood, and we are talking about, let's maybe we take this time to invest. It was right after the crash, just around time CJ started his portfolio. And so we opened up a Robinhood account, first time doing so. I used a link from a friend of mine, Doug. And with that link, I was able to get one free share of something, which I will disclose in my portfolio, which has done quite well, that one share. And what I did was I sat down, I weighted it, and I have not sold anything since I created it about a year ago. So this is now what I did do was I did do a second DCA buy across the weighted averages about 2 months into it. So there's been an addition to the holdings 2 months into it, but nothing has been sold. And so this is what a portfolio untouched looks like after 1 year. My portfolio mix has an equity breakdown of 51% consumer goods, 28% hospitality, 21% of manufacturing materials. And then much like CJ, I have some sector-focused ETFs. So Robinhood's telling me 79% of my ETF exposure is uncategorized. So we'll see what that is, maybe. And then we have an index ETFs and sector ETFs. I hold 0 options because of my immediate family being in the financial industry. We're actually not able to be authorized to trade options on Robinhood. And then 19% of it is crypto. And that crypto, as I said before, is Bitcoin. And these weighted averages have obviously shifted over the course of time based on price action. So without further ado, I'll start with the free share. So when I signed up and I used my friend's referral link, I got a free share of SunPower, ticker SPWR. I got that free share at $5. It's now worth $31.93. That's it. All right. My first purchase. Hold on here. Norwegian Cruise Line, ticker NCLH.
Oh, I like
it.
Now, wrong.
Well, here's the deal, right? I mean, Norwegian Cruise Line, I saw it at $16.13. I just gone on a Norwegian Cruise Line trip to Alaska in 2017. So I had experienced it. I liked it. And my mindset on like day 6 of lockdown last year was, this thing's going to be over. It's half price. And when this thing is over, people are going to jump on cruise ships and go. That hasn't happened, but it also hasn't kept the profit down. You could see from when I purchased it to now, 83.95% return on Norwegian Cruise Line. And it occupies just under 2.5% of my portfolio. Not bad, because I don't think anybody would go on a cruise right now. Next one, MGM Resorts. Now, I went into the hospitality mindset thinking, again, this thing's going to be over in a couple of months. People are going to just zoom right back to Vegas, start losing all their money all over again. And it didn't happen. But 141% return since a year ago. It's 3.3% of my portfolio. Next one. Along with the Norwegian Cruise Line, Carnival Cruise Line, bought at 16.5, and it currently at 29 cents, 75.37% return in 1 year I've gotten with this. It occupies 2.43% of my portfolio, and it was underperforming against the rest so badly in midsummer of last year, I actually was about to sell it and go into Carnival bonds that were offering 4% return with an October expiry. I'm really happy I didn't do that. Next one. You got any CJ, any comments yet?
Yeah, is there supposed to be like a corresponding slide with each one of these? Because I don't think you've been changing slides.
Wait, you don't see the ticker list growing bigger?
No, I see that we're still on the first of 12 slides.
Oh my gosh. All right. This is how we do.
I should have stopped you earlier. My mistake.
No worries. No worries. All right. Let's go do this. I thought I had this whole presentation going down. Great. All right. Okay. No worries. Can you see my my presentation now?
No. I see your Zoom.
How about now?
Yes. Now I see it. There we go.
All right. Here we go again. But anyway, these are my first 4 holdings. I apologize. You couldn't see my fancy click through that was happening. I worked so hard on this presentation. It was supposed to go like this. So here we are now. My next holding, Ford Motor Company. And this is what I share with CJ. And I bought this at $6.24. It's currently $12.94, 107% return. And I thought, again, people were going to hit the roads 3-4 months after COVID lockdown. United Airlines. I like them. I fly them. I am a Premier +1 status person on them. I take them all over the world. I said 4 months after this lockdown, people are going to start flying everywhere. $34 I bought it at. Currently at $60.70. Total return so far, 74.39%. Spider Trust Gold. GLD. I bought GLD in order to protect my wrong mistakes. I bought GLD to hedge any misfortunes of my mindset as I sat around that kitchen table that afternoon. I have returned a whopping 0.014%. It has done exactly what I intended to do, which is nothing, and I'm okay with that. Next. Spider, the S&P Oil and Gas Exploration. XOP is the ticker. I jumped on this puppy. It actually used to occupy a lot more of my portfolio than 3.43%, but it's gone down since some others have taken over. 115.9%. This was right before all the news came out on negative oil prices and no more storage available in Oklahoma. And I thought this position was going to be zero. Thought I might have to owe money, but no, 115.99%. And here's the big one, UCO. I went into this big. You can see it occupies a large portion of my portfolio. And CJ, I will tell you what I did before I hit the buy button on this. Now, for those of you who don't know UCO, the ProShares Ultra Bluebird Crude Oil ETF, is it a double levered WTI oil future ETF, okay? Meaning you can get in twice as much trouble just as quickly as you can win big. Before I hit the send button, I got on the phone. I actually had a long conversation with John. I called up John Nigerian. I said, I was like, what do you think of WTI? What do you think what's going on? And he doesn't offer financial advice, but he was telling me about all the oil shortages and all the tankers off of, South Africa and stuff like that. And I said, well, I don't believe it. I think people are going to start driving soon. I think we're going to clear out those storage facilities in Oklahoma. WTI is going to shoot through the roof. I rode this position down minus 85%. You want to talk about diamond hands? My hands were never shinier or polished more than in the late summer, early fall of last year when this position was down minus 85%. It is currently up and back again with life at 66.16% return. Very happy for this. Next one, Bitcoin. And this is my last holding. Went and took a position in Bitcoin. You can see I have a cost basis of $8,560 on this position. Occupies nearly 50% of my portfolio. It didn't always do that. It's price action based now that it occupies that much. Up 570%. Not so bad. So in total, my total portfolio performance for the trailing 12 months is 197.61%. And there it is, folks. That is what is on my Robinhood app.
So how much percent of your total net worth is that portfolio?
Oh, no, it could buy a nice German car, but it's not,
There you go.
Yeah. So it's interesting times, but I don't know. It was fun, and I don't plan on touching it. So we'll see what happens. I'll come back a year from now and see if it was still a good choice. The actively managed is such a great way. I mean, no matter what age, you need to start putting money away. You need to start having a professional do an actively managed portfolio for you for the long term. That's why I never criticize anybody for taking profits on their crypto trades, right? You never know when they're going to go down. You never know when they're going to moon. If you've made money and you're happy with the money you made, you're feeling uncomfortable, take the profits, bag it into an actively managed portfolio or something else that you can enjoy those profits down the road. So,
or put it all into airlines and cruise liners and oil.
Definitely not hex. No hex. All right, folks. I hope you enjoyed our little fun segment today on a lazy afternoon on Sunday. Any questions, put them in the comments. We're pretty transparent on what we do here, as you just saw. So, as always, we love you watching. Thank you very much. And CJ and I will be back tomorrow for our daily episode of Trade the Chain. So tune in then.
See you then.